Yesterday, because Paddy was barking so loudly that all the records turned haywire. I hope she doesn't bark today. No, I'm going to buy a muzzle. Okay, so I do need your help. Okay, before we start, I'd like you to turn off your WhatsApp. Okay, I will join all of you. Okay, we don't need the WhatsApp for now. And I would like you to enlarge my screen. Okay, I won't be doing any screen share. So, and I would like you guys to prepare our guidebook. Okay, so if you have your guidebook, hey, please wave to me so that I know that you have. Okay, I will be taking some notes or we'll be doing some recap. So the lesson this week is going to add on. It's going to be an add-on from last week. I'm not going to cover much new content. Probably one or two more. Okay, so I do expect today to end earlier. It really depends on your classroom participation, how fast you guys are participating. So whenever I ask a question, okay, if you can type it out, okay, if you can unmute and answer, okay, that would help a lot. And I do expect today, based on the participation, how fast you participate, we should be able to end around 11, if not 11:15. Okay, it all depends on your cooperation. Clear? Okay, so with that, okay, let's kickstart. Have a good have a good Chinese New Year week ahead. Okay, so for the viewers out there, okay, this lesson is to be covered in conjunction together with last week's lesson on national income accounting. So it's an add-on. All right, so now I need your help. Okay, to type out. Okay, what is one concept that stuck with you from last week? Okay, what do you remember from last week? Just one concept. Good enough. I don't need essay. Okay, so someone brought up the 3 macroeconomic goals. Okay, that's for H1. Someone also brought up comparing standard of living across time. So today we'll be covering across space in depth. Okay, so pay attention to that. Okay, so now let's quickly run through what is our learning objective. Okay, so look through carefully. So the first 8 objectives are actually all recap. Okay, so we'll quickly sprint through them. Okay, item 9 and item 10 will be our emphasis for today. Okay, so item 1, okay, we will be briefly covering what is the similarity and difference between micro and macro. Okay, how we're going to transit. We'll also be briefly touching on the 4 macro goals for the H2 wise. Okay, and for H1 will be 3 macro goals. There'll be 1 goal lesser. Okay, we'll be recapping on the usage limitations of GDP 4 and 5, 3 and 4. Surprisingly, no one brought up nominal and real. Okay, so I'm concerned. So we'll recap. Okay, so what is real and nominal GDP? Okay, we'll be using the concept of SOL later on. Indicators. Okay, we'll be recapping some of the more handy indicators, alternate indicators especially. And we'll be recapping on how do we compare SOL across time. Okay, and 9 and 10 okay, will be our focus for today. So later on, 9 and 10 will be tested. Okay, so pay attention to that. Yeah. All right. Okay, so the first 8 items, I'll rely on you to fill the gap. Okay, then I'll add on. Okay, the faster you guys participate, okay, the faster we can end today's class. Right. Okay, so here. Sorry. Okay, what about micro and macro? What's the key difference and what's the key similarity between the two? Let's name one key difference. What do you think is different? In your opinion. Okay, we have different groups involved. Different economic agents, to be more specifically. Okay, micro is about consumer firms. Macro is about the 5 respective group, right? Remember last week I covered consumer, firms, government spending, export and import sector. Okay, so we are looking at the entire economy. Okay, and to be more specific, okay, I would like to recap on just how someone brought up the objectives. Okay, so the objectives that we'll be looking will be different. Okay, micro and macro objectives. Okay, so let's do a quick recap. Okay, what should we be concerned about in terms of objectives? Micro, what is the objective?
Efficiency, equity.
Good, efficiency and equity, the two E's, right? Okay, what about macro?
Economic growth, full employment, and price stability.
Right, so we have full employment. Okay, I'm going to write in short form, because you guys speak fast. Price stability, economic growth. Okay, and for the fourth one, okay, is for H2 only. It's called balance of payment. So whatever that we are learning in macro, okay, there is a huge emphasis on concept identification, right? So you have to identify which concept is being tested. Okay, and then you apply the framework of problem solving. So it's not too different in the sense that in micro, when we identify that there is inefficiency, we probably adopt what? Okay, policies such as what? Okay, policies to correct negative externalities, positive externalities, right? Okay, so if you refer to our book, okay, page 48, okay, this is just a very quick recap, okay, on GEMS employer framework, okay, to address negative and positive externalities, to be more specific. Okay, page 48. But for macro, okay, we don't have acronyms to address that. Okay, we have two broad categories that I have mentioned last week. Okay, do you still remember what are the two broad categories, okay, that I have stated last week? Okay, it's not as fine as plier and GEMS in page.
Is it demand side and supply side?
We have demand side policies and supply side policies. I'm so sorry, my head is consistently blocking. Okay, I'm going to rub away. Okay, DSP and SSP. Okay, I'm going to use short form. Okay, full employment, price stability, economic growth, and BOP. Get used to short forms. Okay, but try not to use them in your answer, okay, especially as they are case studies. And for demand side policies especially, okay, we'll be learning a few branches of policies, okay, in the future, such as fiscal, monetary, exchange rate. Okay, so I'm not going to go in depth. Okay, I'm just going to cover the two broad categories, okay, of these two to achieve all these few goals. Okay, so with that, okay, let's move on. Okay, so to quickly wrap up, okay, the approach is fairly similar. Okay, we need to identify what are the problems that are involved. Okay, so if we identify that the problem is efficiency and equity, we'll use a micro framework. Okay, if it is the macro goals, that we are pretty much adopt an ADAS framework here. Okay, and when we go on to economic growth, I will show you what is the similarity between these two. Okay, you can import these two goals into economic growth. Okay, there are other growth models that address efficiency and equity together. Alright, so GDP. Okay, let's do a quick recap. Okay, can you quickly type out, okay, what is the definition of GDP? Okay, while I turn on the lights, it's very dark. Without looking at the notes. No notes. Stop looking. I am looking at all of you. Remember, this is recap. Of course, if you want to use notes, then okay, no choice. Better than nothing, right? Okay, what should we be concerned about GDP? Okay, Zach, good. But there's one key phrase missing. Okay, Dylan, good. So let's do a quick check. Okay, we are concerned about the value of final goods and services produced within a geographical boundary. Given time period. Okay, so most of the students miss out given time period. Okay, so last week we also briefly covered the difference between GMP and GDP, right? Okay, so there is not much difference. Okay, but normally we stick to GDP, not GMP. Agreed. Okay, and last week I also briefly covered using circular flow, okay, to address GDP. Okay, so for H1, circular flow is not required. Okay, but the idea behind this tree identity is very similar, very easy. Alright, so last week I actually used this tree identity, right? Okay, the output approach to measure GDP, okay, which is what we've seen in the standard definition. Okay, are y'all still familiar with the other two identities? They are equivalent to one another. So when firms hire household to produce output, okay, so what do they provide in return? What's the I word?
Is it income?
Yeah, income. Okay, and when household receive income, what do? They spend, right? So what is the E word that's equivalent to spending? Very, very important. Expenditure. Okay, so these three words are used interchangeably. Okay, so for my H2 students, okay, I will probably cover these three in depth, okay, using the circular flow. Okay, when I cover this, my H1 students don't need to know circular flow. Okay, but this tree identity is exceptionally crucial. So sometimes you see on your x-axis when you label your ADAS, right? Sometimes you see real output, sometimes you see real NY, sometimes you see expenditure. What do you use? They are talking about the same thing. Okay, so most of the time you can put R and Y. Okay, I think it's safe enough. Okay, for those who are familiar with ADS and AS framework, we have learned this before. Okay, if not, okay, this is a very simple introduction. Alright, so last week, okay, we also learned about real and nominal. I'm not going to cover these four tables again. Okay, so what's the difference between real and nominal? Can you all sum up in one sentence? Okay, what is the key difference and which one is more important? Yeah, like I say, okay, the first few parts is all about recap. It's all about you. And last week I did my job. This week your job is to recall. Okay, and try not to have any leakage. If there's any significant leakage, then you got to pull the plug lah. Right, so someone brought up real GDP has a base year, nominal GDP doesn't. Real GDP is about constant price and base year. So which one is more important? Which one is more significant? Or are they the same? Okay, real is more important. Okay, so real has been adjusted for inflation. Okay, nominal is not adjusted for inflation. Alright, so I'm not going to derive these four tables. Okay, for the viewers who missed this out, okay, please catch up the earlier lesson. Okay, I'll probably put a card down here so that you can access the previous lesson. Yeah. Okay, so I just want to point out that there are a few key terms that you want to be concerned about: real and nominal. So sometimes they don't use real and nominal, but they will test you. Okay, so what are the terms that are interchangeable with real? Yeah, I think someone brought up already. Okay, constant. Okay, GDP at constant price, or there's the presence of base year. Okay, what about nominal GDP? How do we know whether is it nominal GDP? If the question doesn't tell you nominal, okay, what are the two words that they use? It starts with C.
Current price. And market price.
Current price and market price. So exceptionally crucial when you're comparing GDP across time. Okay, then one country then you want to look out for what are the data inadequacies. If the question gives you market price or current price, you can bring up, okay, as MTTCs, data inadequacy or data insufficiency, that if we don't know inflation rate, we cannot estimate the real GDP. Okay, that's some of the tips and tricks to work around data inadequacy, which we will encounter more as we go through our practice series. Okay, everyone good? Clear? Nominal and real? Right, so what are some of the limitations? Okay, just a quick recap of GDP. Why is GDP not good at capturing? In other words, still remember?
Underground economy.
Underground. Underground. Right? And we also want to be concerned about illegal, right?
Yeah.
Okay, so these two are economic activities that are not captured. Okay, I covered last week. Okay, illegal is a subset of underground. Okay, so I'm not going to spend more time here. So later on, okay, I'll be using another term. Okay, you may want to put a slash here. Okay, you can put the term called shadow economy. Right, which makes perfect sense, right? Okay, you only get shadow when there is no sunlight. There is a sunlight, okay, but primarily underground activities. And one more is non-market activities. Okay, these three I've covered last week. Okay, so I'm not going to cover this few anymore. Alright, I'm going to move on to SOL. Right, so okay, what is SOL? In one sentence, what is SOL to you? Quick, type it out. Or you can unmute any. Yeah, Zach.
Level of well-being enjoyed by average person of a country.
All right, so we're looking at the average well-being of a citizen. So okay, remember I emphasized that there are two components, right? What are two components? Every time when you talk about SOL, okay, you must relate to these two. What are these two? It's like the left hand and right hand of SOL. Which are the two? Okay, material and non-material. Okay, please drill this inside. Okay, these three are. So we are concerned about the well-being of an average citizen. Realize that this is average. Okay, it does not address income distribution, right? So last week we used an example already, right? Okay, so average may actually paint a very poor scenario of how income is distributed, especially in the presence of high income people or high income net worth citizens, right? So this is one of the inherent limitations, okay, if you want to measure using your average. Okay, it does not tell you what is the income distribution. Right, material, we are concerned about the quality and quantity of goods and services. Okay, and non-material, we are concerned about the intangible aspects. Okay, so anything that is not related to goods and services, intangible aspects, okay, you can relate them to non-material. So what are some of the examples that I've used last week other than stress and pollution? Yeah, I know all of you are very stressed. Right? No need to rub more salt into your wound. Okay, try something else. Okay, you're concerned about your education level. Okay, your access to healthcare, right? Quality healthcare.
Crime rates.
Okay, crime rates. I'm so sorry, my head is blocking. Okay, happiness level, etc. So a lot of things that cannot be measured in dollars and cents, we can easily attribute them to non-material SOL, right? So each of them, they have a respective indicator. Okay, I'm going to move straight downwards, okay, to illustrate the limitations of measuring material and non-material. Okay, so the measurement, okay, we can see that the measurement of material SOL, okay, please jot this down or please recapture this again. We are concerned about real GDP per capita. It's not nominal. It has to be adjusted for inflation. Alright, so we are concerned about how your income is divided across the population. So this is a good indicator if your income is generally well distributed. The assumption is that. Okay, but for unequal societies, especially when there are a lot of high net worths or high income earners, then this may not be a good representation. I'm pointing here, point here, correct. Maybe like that better, like that. Because my mirror is actually flipped, so I have to point the other way. Alright, so let's look at some of the limitations when we use real GDP per cap to estimate your material standard of living. Okay, realize that the distribution of income is not used, is not captured, right? So last week we actually talked about the indicator, okay, to overcome this issue. Okay, do you still remember what is the indicator to measure income distribution?
Gini coefficient.
Gini coefficient. Okay, so this is actually used, okay, to address the inherent limitations of the present measurement of real GDP per capita. Alright, so pay a close lookout on the extract. Okay, they will tell you the income distribution. Alright, so it takes the value of 0 to 1. Okay, do you still remember the value? Okay, what does it represent? If it's closer to 0, what does it mean? Okay, must know how to read. Okay, I'm not going to use the Lorentz curve to illustrate. Okay, so this illustrates perfect, imperfect. Okay, so the bigger the value, the more unequal it is. The lower the value, the more equal the income is distributed. So the smaller is better. So this is what it means. So sometimes, okay, when we move on to macro, or rather we are actually at macro, when we move on to fiscal policy, okay, I forgot to mention this in the earlier class. Okay, they will tell you Gini coefficient as a result of net of transfer payment. Sometimes you'll see this, Gini before and Gini after. Okay, they'll put it net of transfer payment. Right, so transfer payment simply means, okay, net of taxes and net of subsidies, welfare payments. Okay, so most of the time, okay, your Gini coefficient that is net of transfer payment tends to be lower. Okay, because you have a progressive tax rate and you have your welfare system to redistribute income. So it tends to be lower. So don't be caught by surprise when you see these two Gini coefficients being used together. You got to know the difference. Why is net of transfer payment lower? So this is a combination of concept of fiscal policy that we'll be learning in the future, okay, as well as income inequality. So on top of that, okay, realize that there are other weaknesses on your measurement of your material standard of living. So most of them actually stem from GDP, right? Like non-market activities, underground economies, all the same. Okay, so pay attention to this. Alright, and you also want to pay attention to population growth also. Okay, later on, okay, if you want to compare your standard of living across time, okay, population is a key indicator that you must know. Okay, later on we'll talk about that. Okay, likewise for non-material standard of living, okay, we are concerned about the qualitative aspects, right? So some of the difficulties or limitations come in the form of hard to measure, right? Insufficient information. Okay, and it does not measure material standard of living. So you realize that non-material or material, they do not account for the other half. That's why we always use them together. It's just like left hand and right hand. If you want to drive a car, okay, you need both hands. Okay, unless you are handicapped, okay, then then there is a specific steering wheel for one hand. But most of the time you use two hands. Okay, if not, if you are driving one hand, then something must be wrong. Your driving quality will be affected. Okay, so I just want to quickly address, okay, the entire standard of living, the usage, the limitations, and the alternate indicators together. Okay, so you realize that there are more comprehensive measurements other than what we use traditionally. Okay, so traditionally we use real GDP. We use real GDP per capita to measure. Okay, but what are the other indicators out there? Okay, you must have a few good ones that you know. Okay, most of the time you will see these two, 1 and 3, Human Development Index. Make sure you're able to spell out. Okay, so Human Development Index accounts for 3 parameters: life expectancy, your educational attainment, okay, or sometimes they use literacy rate as a proxy, okay, and your GDP per capita. So you see that it's actually more comprehensive because it attempts to capture one aspect from material and 2 other aspects from non-material. Do you see that? Okay, so it's actually slightly better, but is it perfect? Yeah, it's not perfect. Nothing is perfect, right? Okay, we can only make progress with every change of anything. You cannot make perfection. So why is it not perfect? Anybody know why is HDI not perfect? It's an improvement of traditional indicators, but why is it still not the perfect?
Because it doesn't count income inequality.
Right, okay, so there is a lot of other things that are not addressed, right? So remember, especially for case studies, look out for data that are not present. They are invisible. Okay, those are the ones that are going to attribute to your antithesis. Okay, good, Dylan. All right. Okay, so sometimes you also see pollution index. This is quite straightforward. Okay, I just want to quickly talk about HDI. It will come out as one of your soil question if I am not wrong. Okay, it also comes in between the value of between 0 to 1. Okay, so in this case, 1 means that it is good. Okay, 0 means poor. Okay, so make sure you are able to is the exact opposite of Gini coefficient. Okay, so make sure you are able to identify that. Clear? Alright, okay, so we have actually talked about standard of living, okay, as a whole. So when we compare standard of living across time, okay, there are a few components that we need to be mindful about. Okay, so number 1, we need to assume that there is no material change in the population. Okay, so a quick example would be this. Okay, remember, okay, if we experience increase in real GDP, okay, is it necessarily good? We don't know. Why? Okay, if your population is increasing faster, okay, what can we conclude about your material standard of living? It drops. Okay, so we need to have the complete story, or at least if you want to build your case that there's an improvement in your material standard of living, then you have to hold what constant? Okay, you have to hold your population constant. Okay, very important assumption to make. Okay, when you want to justify. Okay, or you want to look out for any data that suggest population growth. Later on the quiz also come out. Okay, you want to assume that your prices remains the same. Okay, or is adjusted for inflation. So you want to use real or nominal data here? Real or nominal?
Real.
You want to use real, okay, always look out for real. Okay, and you also want to have, okay, data on your income distribution, right? Why is that so? Okay, because we realize that, okay, when your GDP grows, okay, it could grow at, maybe I spell it too quickly. Okay, so let me quickly illustrate this. You realize that when countries grow too fast, okay, they give you one side story. Oh, real GDP is growing. Is it necessarily good? We don't know. Why? Because it may favor only a few people, while the rest remains poor. Right? So this is where unequal income is distributed. So you want to know what is the Gini coefficient. Okay, so if income disparity widens, then material standard of living is going to be affected. Okay, it's going to worsen instead of improve. Yeah? Following me? Okay, must know okay, what are some of the things, some of the assumptions that must hold. Okay, likewise, okay, if we want to compare your standard of living across time, we need to know whether are there any changes in your non-material standard of living, for instance. So last week I actually covered, right? When the economy is growing, okay, when there is more production, real GDP is growing up. Is it necessarily good? We don't know. Why? Okay, because it could come at the expense of environment, right? What happens when there's more wastewater discharge? What happens when there's more air pollution? The environment is worsened. And what happens when the environment is worsened? People's health will be worsened. And then the health quality is actually worsened. Then this will all compromise non-material standard of living. Make sense? And also last week I also showed you guys another way of argument, right? So this is very popular. Okay, for those who didn't copy down. Okay, a popular link between real GDP and how you want to substantiate improvement in your non-material standard of living. Please jot this down. Okay, so you want to go through this sequence. Okay, when there's an increase in your real income, for instance, how can it improve your non-material standard of living? Can it happen? It can, okay, but you need to know how to derive step by step. Then you want to talk about higher tax revenue collected. Right? Okay, so the government will actually collect more tax revenue from firms because they make higher profit. They collect higher tax revenue from individuals because they make higher income. Agreed? Okay, so when your tax coffers increase, what can you do? Okay, you can afford to spend. Increase spending on where? Okay, on education and healthcare. Then in this case, you realize that your education quality, your healthcare accessibility may improve as a result of this sequence. This is a very popular sequence that you need to know. When you want to relate income growth to improvement in your non-material standard of living. Is that clear? Right, other indicators are actually addressed already. Okay, I will skip. Okay, so far so good. Okay, we are done with the recapping part. Okay, if there's any more questions pertaining to what we have covered last week, please PM me. Okay, drop me a comment segment under the comment segment chat function. If not, today we'll be moving on to our focus of the day. Okay, which is comparing GDP across space. So I'd just like to have a quick show. No need hands, but can you all let me know whether you all have learnt how to compare SOL across space and the usage of triple P? Have you all learned PPP? Okay, so one yes, one no. For those who haven't learned, I'm concerned because it's a very important concept that's used here. Alright, so I want you all to be mindful whenever you see data with countries. Okay, this concept of space must come in. Okay, I'm going to compare between countries. So what should I be looking out for? Right, okay, so give me a second. Where is I'm looking out for my span. Give me a second. Never mind, I think I should be good with this. Okay, so let's consider this. Okay, let me see if my figures are right. Okay. So we have these two countries. Okay, Singapore. Okay, so let's consider that the per capita income is $3,000. Okay, and the per capita income for Malaysia is in ringgit, right? $3,000. Anyone haven't been to Malaysia or been to Malaysia before, right? Okay, so Malaysia uses ringgit. So how can we compare between two countries? Realize that they are denoted in different currencies, right? So what would you like to do here in order to have a fair comparison? Anybody knows?
Change it to our common currency.
A common currency. So we will for non-economic students, they will typically use the concept of market exchange rate. Okay, market exchange rate is what you will get, okay, when you go to a money changer or a bank. Okay, so anybody knows what is the market exchange rate, the approximation, especially if you have parents who like to go Malaysia. This in the past lah, now it's not possible to go there lah. Not say not possible, very difficult. But what
Is it 1 to 3?
okay, 1 is to 3. So it simply tells us that for every 1 Sing dollar, we can exchange 3 ringgit, right? Make sense? So we can actually see that I'm going to put an equivalent. What is the equivalent of ringgit? Okay, if we convert Sing dollar to ringgit. Based on the market, $9,000. Okay, what about Sing dollars? Equivalent?
1,000.
1,000 Sing dollars. Is everyone following me? Simple mathematics. So, okay, just by looking, okay, which country is likely to have a higher standard of living?
Singapore.
Singapore, right? Singapore is earning higher absolute income, right? Okay, but is it necessarily a fair comparison? Okay, so some of the issues that hovers around this method of estimation, okay, realize that we are using the market exchange rate, right? So market exchange rate is subjected to fluctuations, right? So will it be one Sing dollar is to 3 ringgit forever? It won't be, right? Okay, so in the future, okay, I will be covering exchange rate determination. Okay, I will teach you a new set of acronym. Okay, I'm not sure whether I will be inserting a card here. Okay, for the viewers. Okay, I hope I remember. If not, okay, you may want to relate to a future topic that will be covering called exchange rate determination. Okay, so realize that your market exchange rate is subjected to market volatility of demand and supply, and it's also subjected to central bank intervention, okay, or policies. Central bank policies, not circuit breaker, central bank. Okay, we'll be learning this. Okay, when we talk about monetary policy. So you realize that it is volatile. So I'm going to show you. Okay, what do we mean by volatility? So now, for instance, okay, if the exchange rate changes from 3 ringgit to 4 ringgit, maybe 5 ringgit. Okay, what can we conclude about the exchange rate for Sing dollar? Okay, based on this expression. Okay, all of you are science students, you all should. So in the past, 1 Sing dollar can buy 3 ringgit. But now, 1 Sing dollar can buy 5 ringgit. So what has happened to Sing dollar?
Is it appreciation?
Very good. Okay, so this will be the word they'll be using. Please don't use increase or decrease. Please write this down. Very, very important. Don't use increase or decrease. Okay, it is either appreciation or what is the S word? Anybody knows? The S word is called strengthen. Okay, so Sing dollar has actually strengthened relative to ringgit. On the contrary, we can see that the ringgit has what against the Sing dollar? If Sing dollar appreciated against ringgit, on a relative basis, ringgit must have D word. Depreciated or W word. Weakened. Okay, I hope you guys got the right terms. If you use increase or decrease, I'll mark you down directly. Okay, straight go to 0. So we can actually see that as a result of exchange rate volatility, now let's try to derive the new ringgit equivalent. Okay, so if you are earning $3,000 in Singapore, okay, what is the ringgit that you can get, or what is the ringgit equivalent that you are earning in Sing dollar?
15,000.
15,000, right? Okay, and this will be $600. Okay, so you can see that because of market exchange rate, okay, it tends to under or overestimate the purchasing power. Okay, because there are fluctuation in your exchange rate, right? It's not a good comparison. So this is one issue that we face, okay, when you use market exchange rate. Okay, and the second thing that we wouldn't know, there is the most important, okay, would be the cost of living. Okay, so remember, cost of living. Please jot this down. So for this slide, I only need you to copy down the definition. Okay, it's not in the book. Okay, purchasing power parity. Okay, why are we learning, okay, this theoretical exchange rate? Okay, please jot this down under the definition part. Okay, PPP stands for purchasing power parity. So, a few things that we need to know about PPP. We know that market exchange rate is not a good proxy. And we also know that market exchange rate does not adjust for cost of living. I'm going to show you what do we mean by cost of living through an example here. Okay, I just need you to copy down the definition. Alright? So, I want you guys to follow me closely. This is just an illustration. Okay, so to illustrate, okay, the concept of PPP. Don't need to copy this table down for you to understand. I'm going to upload this anyway. Anytime you're not sure, just come back. Alright, okay, so earlier on we have gotten these few figures, right? Okay, based on the market exchange rate. So the nominal or market exchange rate is 1 Sing dollar to 3 ringgit. Or if we express ringgits in terms of Sing dollar, it will be 1 ringgit is to 33 cents Sing dollar. Are y'all following me? Fairly straightforward, right? So if you look at PPP, it tells you this is a theoretical exchange rate whereby a given unit of currencies should be able to buy the same quantity of goods in all countries. Okay, so what does it mean? So let's use a good that is available in both Singapore and Malaysia. A Ramly burger. Anyone not familiar with Ramly burger? Have eaten Ramly burger before, right? You all know where to buy it. I don't know where to buy it. Ever since now Pasar Malam is no longer there, I don't know where can I get it. But it makes me hungry. This kind of junk food. But anyway, I'm not here to shame Ramly burger. I love it. Okay, but you realize that when you grow, let's say if you go to Malaysia, oh, okay, I'll PM me the address separately, right? If you were to go to Malaysia, okay, and we have to buy it in Singapore, okay, you can see that if you buy it at Singapore, it costs, let's say, $1. Okay, and if we buy it in Malaysia, it costs 75 ringgit cents. So this theoretical exchange rate tells us that the Ramly burger in Malaysia and in Singapore should be worth the same amount of exchange rate, the given amount of currencies. Okay, so if 1 Sing dollar can buy 1 Ramly burger and 75 ringgit can buy 1 Ramly burger, okay, the theoretical exchange rate will equate both of them to be, okay, 1 Sing dollar to 75 cents. Okay, this is PPP adjusted. Or, okay, if we were to express in terms of ringgit, it will be 1 ringgit, okay, is equivalent to 1.33 Sing dollar. Okay, so this is adjusted for cost of living. So I will give you an let's move on to the third row. I will give you a good example of what is cost of living. So assuming, okay, that you only consume Ramly burger, okay, you have no other expenses, right? How many Ramly burgers can we consume in Singapore? 3,000 burgers, right? But if we were to look at Malaysia, then we have a different story. We realize that although Malaysia is earning substantially lesser in terms of Sing dollar, but because of a significantly lower cost of living, they can buy more Ramly burgers. So the cost of living in Malaysia is substantially lower. Are you following me? So if we were to apply the theoretical exchange rate, okay, if you can convert them and adjust them for PPP, we realize that your 3,000 Sing dollars, if we adjust to the theoretical exchange rate, is equivalent only to ringgit 2,250. Okay, because of a substantially higher cost of living. And 3,000 ringgit, when you adjust for the cost of living, okay, will be substantially higher in terms of Sing dollar if we were to apply the PPP exchange rate. Is everyone following me? So the figures that you see here on the fourth row is actually obtained from the PPP exchange rate here. All we need to is to find the goods of the same good that is in different currency. That one good, and we equate the currency together. Okay, is everyone following me? So this is the power of PPP. PPP is able to adjust for cost of living. Okay, that actually don't need to use market exchange rate. Okay, we use theoretical exchange rate. So it's in theory, right? You realize that everything we learn in theory must have some flaw. It is good because we actually reflect the real GDP per cap that is closer to the cost of living for different countries. So sometimes you hear your Malaysia, if you have parents, they tell you that what? If parents who go visit Malaysia, they tell you that okay, you earn Sing dollar and cross the straits to live like a king, right? Do you realize that? This is what it means. Because cost of living in Malaysia is significantly lower. In Singapore, it's a very high cost country. So what are some of the limitations for using PPP? Anybody wants to try? All right, so first of all, okay, we have to assume that both Malaysians and Singaporeans have a similar consumption pattern, right? Eat Ramly burger. And what happens if they eat different things? Right? One eat rice, one eat noodle. Then there's no basis of comparison. Agreed? Okay, and the next thing that we want to be concerned about, okay, is quality. Right? The cost of and normally good quality food drives up cost of production. Okay, we cannot ascertain what is the quality that is used in Malaysia. Okay, is it mass-produced beef? Or is it Singapore's Wagyu beef? Okay, both in theory can make Ramly burger. Right? But the quality of beef patty, nobody knows. Singapore may probably use a higher quality meat. This drives up the cost of production. Alright? And there's one more, okay, important. Okay, you want to address for transport costs. So for instance, if Ramly burger is not available in Singapore, then they have to import from Malaysia. Okay, so the importing costs will drive up the cost of living. Right? Especially Singapore doesn't produce a lot of things. You realize this, right? Your lecturers don't know whether they tell you that Singapore is a small open economy. Okay, so transport costs can affect will actually step into the limitation of PPP as a limitation of PPP, especially if the domestic country does not produce the good. Okay, I have to rely on imports. Okay, so in a nutshell, when you compare between countries, always look out for PPP adjusted GDP. If you don't see PPP adjusted, then flag it out as a limitation. It's not adjusted for respective cost of living in respective countries because we don't know what's the cost of living. Right? Alright, so I'm going to do a quick rundown again. Okay, I'm not sure whether you guys copied this. Okay, this is exceptionally crucial. Okay, when you want to attempt questions, the thought process that you need to have. If you haven't copied this last week, please copy this now. Okay, so later on, okay, we'll be doing another practice question. So when you encounter solved question, make sure you address material and non-material. Comes with left hand and right hand. If you are comparing across time, then you want to look out for real and nominal, the presence of real and nominal. When you are comparing across pace, you have to look out for PPP adjusted GDP values. Okay, for questions that provides you with a data, always look out for data inadequacy. Okay, and to substantiate your antithesis. And for point number 5, especially when you have learned AD and AS framework, sometimes you need to use for SOL questions, sometimes you don't need. So as a rule of thumb, I'm going to state these two exceptions that you don't use AD and AS framework. Okay, rule of thumb number 1, low mark weightage. Okay, so if the mark allocation is significantly less than 6 marks, you probably don't need AD and AS. Number 2, when the question tells you using data provided. Okay, so these are the 2 rule of thumbs that you should adhere to, okay, to avoid using the full AD and AS analysis. So when we move on to ADAS next week, you realize that there's a lot more things to write. But unfortunately, it's not what you write. Or rather, it's not the length of what you write that gives you mark. It is what you write correctly. Okay, so please make a mental note for that. All right, up to date. Is everyone okay? Okay, we have covered just one new concept today called PPP. Alright, so with that, okay, I will want to start a quiz, okay, to access all your, whether you guys have learned properly. Okay, so I would like you guys to either participate through your PC or your phone. Okay, you can go to Kahoot IT. Okay, I believe all of you are not new to Kahoot. I will shrink my face. Any difficulties joining, let me know. Okay, and later on you can let me know whether you like to play more games or lesser games. Okay, but I want you to copy down the questions that you get wrong. Okay, so please, there are 10 questions here. Okay, so whatever questions that you get wrong, copy down. During the break, you can ask me. Right? It's your duty to flag down and ask me. Okay, let's go. All the best. Wait, just want to check. Did y'all indicate? This seems to be like a replay. I'm not sure. Is it like a replay? Have y'all indicated your choices?
I didn't.
You didn't. Fine. I'm not sure because this is like a new feature of Kahoot. But let's see how it goes. So none of y'all indicated A, right? Okay, let's see. Oh, I didn't know that you can compete against the earlier students. I didn't know that. Hey, good. Okay, then you can see how are you guys faring across the board. If you don't know, just tikam lah. You won't lose marks. Right. Hey, this is quite amazing, right? Okay, that you can that I haven't been using Kahoot for a long time, but you can actually compare between different students. Okay. Hey, well done, Dylan. Right. Right. Hey Zach, are you okay? I don't see your name. You disconnected.
No. I got that one correct.
Okay. Yeah, I'm so sorry. Yeah, not blocking, not blocking. Hey, Dylan, not bad, on fire. Oops. Nope. No go. Everyone got this wrong. All of the above is correct. Oh, I like the retro music, like gaming music. Okay, PPP not current exchange rate Okay, it's a theoretical exchange rate. Okay, your last chance, Dylan, to make this right and to get a top place. Okay. Well done, Dylan. Sorry, but all right. Okay, well done. Okay, if there's any more questions for me, okay, please utilize this break time to ask me. Okay. If not, okay, go for your break. When we are back, let's start the time prac and we'll end early today. Yeah. Okay. See you guys. All right. Thanks for being back. Ooh. Right, great. Thanks, Jens, for being back. So, let's kickstart. We have question 2. Okay, are you all seeing the same question? Okay, so I'm going to open 2 breakout rooms. Okay, and I don't think it's a difficult question, but if you need me, just ask for help. Okay, so the time that I've set is 15 minutes. Once you're ready, please join the breakout room and all the best. Hello, welcome back. Great, thanks for joining me in this time activity. So, I would like you guys to prepare a correction pen. You have your correction pen ready? Sorry for keep stumbling. Yeah, hey, I'd like you guys to participate. So maybe give me a quick heads up. How do y'all find the practice question? Okay, from a difficulty scale of 1 to 10. Don't need to be too humble. If you find it too easy, you can put 0. Maybe we can compare. 0 means easy, 10 means extremely difficult. How do y'all find education and productivity in Latin America? 6, okay, we have a 6. 5. Okay, so gather that this group is probably quite humble. Okay, yesterday we have earlier groups were less humble. They found it was pretty easy. Alright, so remember, whenever we have a few countries, we need to look out for what? What's the thing that we need to look out for? Okay, can you please type it out? We have Argentina, Brazil, and Mexico, right? And we are comparing all the indicators. What's the number one thing that we should look out for? What? Yes, PPP, Purchasing Power Parity Adjusted. Right? So if we were to use, so we can, where's my pen? Okay, my pen is here. Okay, before we hop into the data, let's look at what the question requires. Using table 2, explain which country has the highest living standard and comment briefly on the effectiveness of these indicators as a measure of standard of living. So maybe we'll get we still have some time, maybe we'll get someone to share. Maybe Zach, would you like to share how do you approach this question? You can unmute yourself and try.
Yeah, sure. So like I write, like based on the PPP, right? Argentina has the highest. So, I wrote that Argentina has highest living standard because of the highest GDP per capita.
PPP adjusted.
Yeah.
Okay. Do you manage to use adult literacy and life expectancy?
Oh, in the later paragraphs, I wrote about life expectancy. Then I didn't finish. So I wanted to write about adult literacy, but I had no time to write that. So yeah.
Okay. So what about the comment part?
So like I wrote like for the PPP, right, is limited because like I wrote there's a limitations for PPP, which was just now what we discussed. So like the same basket, and then the difference in quality and the transport cost. Yeah, and then for life expectancy, I didn't really know like the limitations, but I just guessed.
Okay.
Yeah.
So maybe Dylan, would you like to take over? Any limitations for life expectancy or adult literacy that you have tried? Or nothing to add? Yep.
Limitations
Yep.
for
Adult literacy or life expectancy.
like, they are both, how to say, it's HDI, right? So like I wrote like the living standards, the indicators were measured by HDI. Then the limitation was that it did take into account income inequality.
Okay. So now, having these three being present does not necessarily mean that it's HDI. Okay, it's just so happen that we have these three figures. Okay, HDI is a different composite. Okay, it will weigh these three differently. Okay, so they will assign different weights. Let's say GDP per cap, will be weighted 30%. Okay, life expectancy 30%, adult literacy 30%. Okay, and then we'll come out with a composite. So all these three, although they are present, the ingredients are present, it doesn't necessarily means that it's HDI. Okay, so make sure you get the concept right, right? So, but anyway, okay, it's still a good attempt. So before we hop into the data, I want to cover such questions. Such questions are exceptionally popular for case studies, especially H1. H2, they are coming out with this. So how do we address, explain, and comment question? Always look out. Okay, we have, this is a 2-tier question, explain and comment. Whenever you encounter explain and comment, you have to split up the question. Okay, so the mark allocation, the higher mark allocation should always favor whom? Explain. 4-2 split. It's never equal. Okay, comment is always lesser. Okay, if it's 7 marks, then you probably consider 4-3 or 5-2. You make up your own internal mark allocation yourself. Then you know how much to write. So I want you guys to take a quick look. The amount of writings that you have for comment cannot exceed the length of explain. Okay, I do see some of the students lopsided, having lopsided response. So what is expected for the explain? Remember, just now I have mentioned that living standards or standards of living, okay, has 2 arms, right? What are the 2 arms? Material and non-material, left hand and the right hand. So it is always fair to allocate 2 marks each. 2 marks to address which country has the highest material standard of living. 2 marks to address which country has the highest non-material standard of living. Fair? Now for the comment wise, remember, explain and comment. Comment is always a thesis and antithesis question. So in this case, the explain has already taken up the so-called thesis position. Okay, so the comment here will be the antithesis. So we are supposed to find out what is the limitation. I don't need to find out the pros. There's no pros required. The pros already addressed under explain already. I want to find out the cons. So for the limitations, you want to consider breaking down into 1 mark each. The first mark goes to the limitation for the indicator for material. The second mark goes to the indicator for non-material SOL. So I also want you guys to look. Okay, your answer should be as concise as possible. Okay, any sentence that you use, okay, must give you a mark. Okay, I'm going to show you a standard school answer. Okay, and how do you better make sense of the answer key? Okay, which are the important points that you need to look out for? Ready? Okay, so now let's quickly move on to the data before I move on to the answer key. So we realize that this table cannot be used. This is a trick table, right? You realize that Brazil has the highest GDP per cap. We don't even know is it real or nominal because it didn't tell us, right? Okay, so this one we cannot use. Okay, you have to use the one that's adjusted for PPP. Okay, for cost of living. So if you were to look at the answer, okay, I want you all to follow me using the above framework. Let's look out for material first. So this is a standard school answer. Okay, but I just want to point out, okay, if you receive your school answer, how do you better make use of that? Because you cannot possibly write that much. That's why always look out for the bolded keywords that I have for you. Okay, so this is how you make sense of our answer key. So your material standard of living, you need to, I'm glad to hear that you guys identified PPP. Okay, the usage of PPP. But what is the significance of PPP? Okay, in a nutshell, we're looking out for what's the definition for PPP. Okay, what is the role of PPP here? So it equalizes the purchasing power that is adjusted for cost of living. If you use the standard definition, I'll give you 1 mark. But the definition itself, okay, I'm going to U-turn. The definition itself, it is not a good, it's not a complete interpretation of what is PPP. It only tells you what is PPP used for. Okay, if you look out for what we have used earlier on. Okay, it's a theoretical, okay, exchange rate whereby, okay, given number of currencies should be able to buy the same good, but it doesn't tell you what it symbolizes. Okay, so the meaning behind this is okay, we are going to use PPP exchange rate to adjust for cost of living. So this is the key that you need to use. Okay, equalize the purchasing power and cost of living. 1 mark. The next mark goes to identifying which country has the highest material standard of living. So this keyword is exceptionally crucial. If you don't have a minus mark, must tell me material. So total of 2 marks. Okay, so all these, you can realize that all these are access. No need to write. But if you ask student if you can write, then write lah. If not, okay, go focus on the bolded keywords. Okay, so far so good for the first 2 marks. So the non-material part, okay, you have to either make use of literacy rate or expectancy rate. You don't need both. Remember, all you need is one indicator and to elaborate in depth. So I often encounter students that are very ambitious. They want to cover everything. So you can count, right? Okay, so if you have 4 marks, 2 marks for material, 2 marks for non-material. Non-material, okay, first mark is to identify which country. Second mark is to justify why. Okay, you cannot be using both literacy rate and your life expectancy down here, because it will make your answer too long. So I just want you all to focus, okay, on the school original answer and the important keywords that will score you the mark. So if you brought up literacy rate, you need to explain why is literacy rate important. So why is it important? Okay, it simply tells us that this is an indication of the access to basic education. Right? Basic education only, yeah? Okay, so if you understood what I'm saying, okay, you can use this as a limitation later. Okay, does it explain any other form of education, such as tertiary education? Doesn't. Okay, so learn to use that. So with this, we can this actually implies that, okay, Argentina has what? Okay, has greater access to basic education. Then we can infer that, okay, they have highest non-material standard of living. Same, must have non-material. If you just tell me living standards alone, okay, I will not give you the mark. You have to identify which hand is driving the standard of living. Okay, I'm going to show you an alternate approach. If you use life expectancy, okay, this is how it looks like. Okay, life expectancy. Why is life expectancy important? And then you want to illustrate. Oh, this tells us this indicates the basic access to healthcare. Right? Only with access to hospital, then you will expect that, okay, people are going to have longer longevity. Then we can infer that Argentina has the highest non-material standard of living. Okay, so for non-material, pick one indicator, either or. You have to explain the significance of the indicator. Is everyone clear? So we are supposed to look out for the limitations of the indicator. Okay, limitations, you want to look out for what is it not good at explaining, or what are some of the things they don't capture. Okay, so in this question, okay, you are supposed to look out for the weakness of the indicator. Okay, this is another interpretation. Okay, so if you tell me that it doesn't capture some other things, it's not as good as illustrating what is the inherent weakness. Okay, so let's uncover some of the weakness. Okay, so if we were to use GDP data, okay, we can use things like underground economy, shadow economy. Okay, so regardless, is it PPP or is it nominal or real, okay, your GDP figures does not capture any of this. Okay, if you use income distribution, I accept. Alright, let's look out for some of the creative ways to find out limitations for literacy rate. Okay, we can see that literacy rate only tells you access to basic education. But it does not tell you, what is the access of education beyond basic, right? For instance, tertiary. So we can't tell whether the quality of education has proceeded or has advanced beyond, okay, your primary education level. Okay, life expectancy, we only capture life and death, right? But anything in between we cannot capture. So what do we mean by that? So for instance, okay, if you are met with some health complication such as accident, total disability, you are not dead yet. You may have a pretty huge, you may have a longevity life. Okay, but is your healthcare quality or your quality of life better or worse? Not necessarily better or right? Especially if you're bedridden, okay, or you have some form of paralysis. This is something that life expectancy cannot capture. It doesn't capture the overall well-being of the person, especially in terms of health. Okay, so with this, okay, I am going to wrap up. Okay, I would like you guys to type out one thing that you have learned, okay, for today, okay, before we call it a day. Okay, one particular concept that you find that is very useful for you today. Okay, we have PPP, right? So always look out for PPP when we compare between countries, right? Anything else? HDI and its factors, right? So just now, okay, having the components of HDI doesn't mean that HDI is present. Okay, HDI index between 0 to 1. So with that, okay, I'm going to wrap up. Okay, thank you for participating. For the viewers out there, okay, if there are any questions that I couldn't address, okay, please stay back and ask me. If you don't have the privilege to stay back and ask me, you can drop me under the comment segment. Okay, I'll pick it up along the way. All right. So with that, okay, I wish you guys a happy Chinese New Year. Okay, and I'm going to stop recording.